Meta stock jumped nearly 10% after earnings. In this video, we're breaking down why the market reacted so strongly. We'll look at the key numbers behind Meta's earnings, what actually surprised investors, and most importantly, what Mark Zuckerberg said on the earnings call that changed the narrative. From revenue growth to margins to Meta's aggressive push into AI, let's break down what Wall Street liked and why the stock took off. Meta Platforms reported a clear beat across the board in Q4. Revenue came in at $59.9 billion, beating expectations of $58.4 billion. Earnings per share were $8.88, well above estimates of $8.02. Advertising revenue, Meta's core business, reached $58.1 billion, again beating expectations. Reality Labs revenue came in slightly below estimates at $955 million, but investors largely looked past that. And importantly, Meta guided Q1 revenue between $53.5 and $56.5 billion, well above Wall Street expectations. All of this clearly helped drive the rally, but it wasn't the only reason the stock surged. The earnings beat helped, but it wasn't the full story behind Meta's stock jump. The first reason was AI acceleration. Mark Zuckerberg made it clear that Meta is moving out of the setup phase and into execution. He said the company has rebuilt the foundations of its AI program, and that new AI models and products will begin shipping in the coming months. This wasn't framed as long-term research. It was framed as near-term product rollout, starting in 2026. The second reason is that AI is already showing up in the numbers. Management directly linked AI to better recommendations, higher engagement, and stronger ad performance. Meta said its current systems are still primitive compared to what's coming, suggesting meaningful upside ahead. That told investors AI is no longer just a future promise. It's already improving revenue efficiency today. And the third reason was confidence around profits, despite heavy spending. Yes, Meta plans to spend aggressively on AI infrastructure, but at the same time, the company guided that operating income in 2026 is expected to be higher than in 2025. That mattered. It showed investors that Meta believes it can fund massive AI investment while still growing profits, instead of sacrificing margins indefinitely. Put together, this wasn't just a strong quarter. It was a shift in the narrative, from cost-heavy AI bets to AI-driven growth with profit discipline. And that's why the stock surged. I really like Meta Platforms as a company, and I believe in Mark Zuckerberg's long-term vision. The way Meta is approaching AI, not just as a feature, but as a core platform, is hard to ignore. That said, after a move like this, I'd personally prefer to wait for a pullback rather than chase the stock here. For me, Meta still looks like a long-term winner, but I'd rather wait for a better entry. Thanks for watching, and I'll see you in the next one.